The main festive season of the year is not far away, and with the real estate market showing signs of recovery, what you're also seeing is a rate war among banks. You've got SBI, which has cut its lending rates for home loans. Kotak Bank has also done it for a short period for 60 days for festive season. In fact, Kotak Bank is also linking the new rate with the credit score of the consumer. So you get a better rate if your credit score is better. How is all of this panning out? Joining us is Shanti Ekambaram, the Group President for Consumer Banking at Kotak Mahindra Bank. Thank you so much for joining us live today on the market. You lead such an important division, right, at the bank. Can you tell us, going into the festive season, Shraddh is here now, going into the festive season, what's the mood like? A lot is being said about the revival in the real estate market, which is why maybe banks like yours and SBI are trying to woo people to take home loans and personal loans.
So two things, as we saw the data of July and August, we realized that consumption was coming back and coming back very strongly. And this is across all categories, home loans, whether it was consumer durables, whether it was personal, you suddenly saw discretionary buying as well as specific consumption come back. So that is when we decided that given the demand for home loans, and there are a number of factors for that, whether it's the availability of ready-made real estate, which is where consumers are going, the price that the developers are offering, and people's need for a larger home and the ability to buy a home across cities, we said, why not start the festive season with Ganesh Chaturthi? What a better day than to launch and look at a rate that is a win-win for the customer. So based on consumption pattern, demand, we decided to sort of look at launching the festival season right from Ganesh Chaturthi. And I think the theme will hold up in my mind going, of course, now is Shraddh. But when Navratra starts, when you get to Navratri, Dashera, and right up to Diwali and Bhau Beach, I think this will happen. See, people, were conservative last year. COVID too made them further conservative. But now I think you're seeing business sentiment also improve. The customer business is doing well. Jobs market having come back. So there is a little bit of a feel-good factor. And we are just helping support our customers in this feel-good factor as they move for demand for various products. Their consumption is our business, and we are seeing them consume.
Oh, absolutely, Shanti. In fact, it is something we've been talking about here on the channel as well, with engineer being the king, the attrition in the IT sector, the wage inflation which is taking place. There has to be a rub-off effect. And thanks to Corona, people are looking at bigger properties and all of that. So let's talk more about that. With your rate now being at 6.5% for home loans and linked to credit worthiness, so a consumer with a good credit score gets a better rate, what's the strategy at play? It's Shraddh, so right now you may not see the home sales take place, but you will in about 15 days from now. So what's the strategy?
So the way we saw it is when you see demand and you see the cities that are really seeing this demand, you're seeing Bengaluru, you're seeing Hyderabad, you're seeing Pune, you're seeing many of these cities see an uptick, and a lot of them are from the salaried segment. As you rightly said, there is a demand in the IT sector, there is a demand for hiring in the technology space, and you're seeing a lot of companies come back to the job market. So salaried is certainly a big area of focus, and the salaried customer has data which is very organized, and it is a much easier sort of segment to look at. Second, you see there is a very large home loan stock in the market, still at reasonably high prices. So we look at customers who we can add value with a rate, as well as acquire quality customers, and we're seeing that. The primary market, which is a developer market, is also seeing movement. And like I said, maybe in the second phase of the pandemic, people were still going for finished properties. But we're beginning to see demand even in the primary properties of very good quality builders. So we're also focusing on the primary market. So our strategy is really broad-based, because we want to build this business, and we believe this is a great way to build a long-term book as well as get quality customers that will help us do many more things with those customers. So we are going the full strategy segment of getting the salaried people, getting the balance transfer market, the primary market, and of course, we continue to look at the other segments that keep coming in. So we are, full steam on our distribution, our partnerships with developers, and we hope that the demand in the next 60 days, as the festival season goes on, along with this very attractive rate, will spur customers to make that movement, even those sitting on the borderline.
Hi Shanti, morning. This is Alex joining in. I know you've spoken about a couple of those cities, and you've also mentioned that salaried is your focus area. But could you tell us what trends you're seeing already? And you mentioned that there is clearly a demand revival that you're seeing, especially in the home loan space. Could you splice that up for us and tell us where exactly that is coming in, what the ticket size of the loans are? Are they more or less comparable to what you've seen in the past, or has that changed? Anything that is standing out to you in terms of the home loans, and also are people switching to you considering that you have an attractive rate right now?
I spoke about that. Let me repeat that. First, let's talk about the demand factor. Okay. Now, we are seeing demand in the whole space. Okay. We are seeing demand at the 40, 50 lakh level. We are seeing demand at the 75 lakh level. We are also seeing demand at the 5 crores and the 10 crores level. Yeah. So people are buying homes and bigger homes across. And in the cities of Mumbai and Delhi, the ticket sizes obviously are higher. But in the other cities, whether it's in Ahmedabad, Pune, Bangalore, and Hyderabad, particularly, even Chennai to a certain extent, it is at around 40, 50, right up to 2 crores. Yeah. So we're seeing the expansion in demand in the entire price range, as you may see it. Okay. And this is because right from salary to business customers, as well as the segments are coming back, and you can see that slow uptick in the economy. So we're seeing it in across, and I talked about the markets that we are seeing this and where we are focused on. The primary market actually is the most interesting one, because the primary market was relatively, under construction projects. People during COVID, just coming out of COVID, even second wave, were preferring fully completed apartments. Even now, they still prefer 50% plus. But you're beginning to see a revival, and that is good for developers in that segment where they are launching new projects and they are getting interest. So there again, Cat A developers, along with good quality customers, we are seeing some amount of demand coming. So I'm saying it's across some of these key cities. You're seeing the entire price point. You're also beginning, finished inventory is still there, but it's coming down rapidly in many of these cities. You have the numbers, I don't have to tell you. But primary market has started as well, and you're seeing some of it. And you're absolutely right. We are seeing, customers who are sitting at high rates in many other parts of the financial system, also looking for an attractive rate. And for us, the quality of the customer matters. The price is there for everybody. And we are also getting that demand. So it is all the way around.
Shanti, talk to us about the other consumer segments also, because in conversations that we've had with, say, automakers, even white goods sellers, some of the trends that are emerging is that while volumes are a concern because of supply side issues, the value of products being sold is actually going up because of pent up demand. So is that something that you're witnessing on the advances side as well? Are you seeing a changing picture? And how do you see that panning out?
Yeah, so yes, the answer is yes. See, along with home, you also have demand from existing and new home buyers for goods within the house. I think July and August, we started seeing the consumer durables of the consumer finance space also tick up quite significantly. Yeah. Typically August, which it starts from independence right up to the end of the festive season, you see a big rise in the consumer finance or the consumer durable finance. And we saw that play out. Interestingly, we saw it play out in July as well. It started in July, it picked up steam in August, and I expect, except for the Shraddh period in between, you will see a very good uptake. Yeah, people are going in for better value, better products, because maybe even work from home makes them want to have a better setup, as they say. And there is a demand for goods right across, whether it's laptops, whether it is, washing machines, whether it is dishwashers, whether it's large format TVs. There is just a demand for a lot of goods, and we have seen that uptick. So the consumer finance also has started picking up and is a very interesting space. Similarly, personal loans, which was again a little muted, has started picking up. So I call it the consumption theme. I think the consumption has begun to happen. And I think there are many factors linked to it. Apart from just the job market, I think the general capital markets have been doing well. People are probably making money, but there is a demand for consumption that has begun to happen. And that's a very, very interesting thing for retail financiers particularly.
Oh, absolutely. Shanti, the other thing we would like to also discuss with you, as you see consumption coming back, and you've pointed out certain cities as far as the property markets go. You've touched upon the white goods as well. What we're seeing play out at the bank is you're clearly targeting the better borrowers, the good quality borrowers, and that's why you seem to be linking your rate with that score. How does that exactly work? I'm sure our viewers would also be interested.
So it's like this. That is for the 6.5% rate where we link it to a credit score. And by the way, other banks have done it too. So you may want to read the small print. Yeah. But that is obviously, see, it is like the prime borrower rate. If you remember the corporate sector, the prime borrower rate is for a prime customer. So in the retail segment, a prime, score, right? The better your score, the better rate. But it doesn't mean that you don't underwrite, less than prime borrowers. There is an acceptable range of borrowers, and we are not just going after that segment. We have a range of customers that we target, and we structure those credits. So we are seeing actually demand from all kinds of segments, but the prime rate is for the prime borrower. Yeah. Having said that, the differentials are not very much in the home loan industry. It may be 10 bits, 15 bits, whatever. But we are seeing demand from right across the segment, including in the mass segment. You have, a 30 lakh demand, 35 lakh demand, etc. And people, post-COVID, you've seen the quality of customers, those who had to get contaminated, got contaminated, or those who had to struggle. Now what we're seeing is those who are left behind are those who have been through the struggle and who have seen better times, whether it's on their jobs or whether it's on their businesses. And, we're seeing reasonably good credit flow across the customer segments.
The credit card market share by a bank is still low in relative terms. So with consumption coming back, are you looking at this division increasing the market share? There are a couple that are on the block as well.
So the last 2 months has seen very strong, spends by customers. The credit card business also grown when there are spends by customer, which was down if you saw the last year. And we've seen that as well. And we are right there along with others among the various offers that we are making to the customers for the festival season. So we've seen a strong uptick in spends in credit cards. In the last 12 months, we've done two big things. One, we have actually introduced 4 new products, and you will hear from us shortly in terms of, making sure that we have the right product for the right customer, right from, the basic right up to the premium segment. And we have also upgraded our technology stack to best in class. That itself was a long exercise where we have completely upgraded our stack. And in the last 2 months, we have really been growing month on month our credit card business. So this is a business certainly we intend to grow. We have, like I said, ready for uptick in the business. We have seen monthly spends go up in the last 2 months. We have seen monthly acquisition better. And this is something that we hope to grow as we go along.
Shanti, you mentioned, in to some extent, you've spoken about what type of customers you're going after, and you, to a certain extent, also alluded to the quality of your book also. But if you talk about the industry as a whole, the banking industry did face some issues in the retail MSME space, some delinquencies, obviously, because of the pressures that COVID-19 placed on finances of individual borrowers. What is the approach in terms of quality for you in the near term? Is that different from what you've had in the past? Are you continuing to be cautious? And what about your book? Are you sanguine about the quality of your book?
I think there are two parts to this. I think COVID has seen customers who were on the borderline and margin already, sort of face the trouble. It was a once in a century event. Actually, if you see now, the quality of customers that you're seeing across the segment, it need not be just a prime borrower, is far better. Okay, Also, if you see the collections data of bank, the current, even during COVID-2, the current demand efficiencies continued to remain. So, which means what has bled in COVID-1 has bled, and they are recovering slowly. But the incremental quality of credit is reasonably good, and so is a good base to grow the way I see it. MSME as a segment actually held out right through thanks to the government's liquidity scheme through ECLGS. And I think it helped the customers during that time. And if you look across you, whether it's an export segment, you take sector after sector, except for those badly hit by COVID, which is travel, and to a certain extent restaurants, and pubs, etc., and to a certain extent hotel industry. Most of the segments have come back, and actually MSMEs are picking up, seeing demand, putting up capex. So I think the MSME, thanks to the government's initiative, has actually held out better in this period than the individual, and the borderline cases have gone. So the increasing underwriting, actually, if you ask me, is the time to really up your game in this business.
That's actually really good to hear, Shanti, and it lends credence to what we're hearing across the board as well. Thank you so much for joining us this morning. Pleasure speaking with you as always, and wish you all the best for the festive season that's just around the corner.